Welcome back. Now, Libstar has reported its strongest first half performance since H1 2022, supported by volume growth, a favorable category mix and cost optimization. CEO Charl de Villiers says the results demonstrate a record first half performance across key financial metrics, clearly demonstrating the strength of the company's transformation. He joins us with his assessment of that performance. Thank you so much for your time, Charl. Now, in this kind of environment where Libstar does acknowledge the relentless pressure on consumers, you managed to grow both revenue and volumes, and that's actually not something you see often, being able to grow both revenue and volumes. How did you achieve that?
Thanks for your time. It's truly a result that we're proud of. We mentioned that within the dairy category, in particular, where we're a market leader, we managed to further grow our market share in that core categories of cheese and butter, and that's through a combination of working with our trading partners, as well as strategic pricing and promotional activity, which obviously caters to the needs of consumers. In the ambient category, we saw an exponential growth from not only our own activity, but also the growth of the market for wet condiments, in particular sauces and cooking sauces, and we contributed to that growth.
It's quite interesting. You mentioned the strategic pricing as you're gaining market share. Does that mean that you had to kind of give up maybe some price increases there in order to gain that market share in volumes?
It's no secret that consumers are looking for value, and that the market in general, particularly on the retail front, has become more promotional. So we need to strategically use promotional activity during parts of the busy seasons in order to participate in that activity, and we did that successfully during the first 6 months.
All right. Charl, the results commentary, though, did highlight that the total defined market for Libstar's product basket showed a weakening value trend over the reporting period. Just contextualize that for us.
So we're a data-driven company, and we analyze what happens within the categories that we participate in. And it was very clear that in the first 6 months, although there was still growth in the general food ex-staples category, we saw a weakening value growth trend. And that seems to indicate, and typically is an indicator, that there is pressure within the consumer market. And that's what we highlighted today to contextualize our own result.
Yeah. And I mean, of course, that is understandable domestically in South Africa, that it is still seeing very, very sluggish and subdued growth. Now, I want to kind of get insight into your export market. How's the runway for your export channel growth shaping up, particularly in that ambient products category?
Yeah. We've seen tremendous success in the development of our own brand, particularly the Cape Herb and Spice brand, which is now available in more than 60 countries.
Wow.
At the back end of last year, we managed to secure listings in some prominent retailers in UK, Ireland, as well as Croatia earlier this year. And that's allowed us to grow the Cape Herb and Spice brand by more than 40% in the first 6 months. We continue to explore export opportunities beyond the spice category, and we have participated, although the spice category is the clear standout success in this set of results.
All right. Well, Charl, the results commentary also mentions the optionality that the lower gearing level gives Libstar in supporting its growth ambitions. So what is at the top of the listed investment and growth priorities going forward?
Yeah, I think what we wanted to highlight there is the fact that we are a growth-focused company. We've, it's one of our 3 pillars, and we've accelerated our focus on the growth theme, and that may go hand in hand with targeted capital investment, particularly in projects that drive either our ESG strategy, in categories that drive maybe areas where we currently are undercapacitated, like the value-added meats category, where we'll be investing, or other categories in which we see market growth beyond what we're seeing in the rest of the market. And those would be your wet condiments as well as your dairy category.
Well, Charl, let's go into strategy because you did release a cautionary announcement as well. I do understand that you are on a journey of a strategic review currently, and then obviously now you're saying that you are assessing this interest that you have gotten from an investor or more for a potential takeover. My question is, do you think that the same kind of value can be unlocked internally if a takeover doesn't happen?
You know, we certainly as a management team and as a board firmly believe that this set of results in particular shows the progress that we are making in delivering the value outcomes, the value delivery outcomes that we sought to achieve when we launched the strategy in 2023. But as a board, you have a broader responsibility to your stakeholders to consistently evaluate all ways in which you can unlock that value. And this cautionary is directly related to one of those. But certainly from a management perspective, as I highlighted this morning, our focus remains squarely on delivering the strong second half result, and that is driven by what I believe a sound strategy.
All right. Well, we do have to leave it there. Charl, thank you so much for your time and giving us more detail on those numbers that we saw coming out of Libstar. That was Charl de Villiers, CEO of Libstar.